Hey, this is Sasha. Thanks for joining me in today's video. And what I want to share with you today is what is open interest and why is it important to an options trader? So stay tuned. We're going to answer this question right now. All right, so if you've been trading options or even stocks, you might have heard the concept of open interest. And here what I want to do is share with you the whole point behind open interest and why is it important and how to find it. Now, we're going to go ahead and take a look at the Think or Swim platform. This is the by TD Ameritrade. And if we go into trading a stock, you can see there's Facebook right here. I went ahead, typed in Facebook, and here we have open interest. Now, if you don't see the open interest, let's say over here, I'll go ahead. It says probability of in the money. I could go into here, basic price in quotes, and go to open interest. And that basically just will show you kind of the number of contracts that are out and available. Now, it's not to say that they can't be more created, but it's kind of like who's holding the bag of what. And, you know, if you're in a fruit stand or a grocery store, is there a surplus of bananas? Is there a lot of oranges? Well, if there's a certain surplus, that means it's easy to buy it or choose the type that you want. So in this case, it's the same thing. Open interest just means, hey, how many people have those contracts? And that means, is it easy for you to get in of those things or out of those things as needed? So here with Facebook, as you can see, the 57-day option contracts here, this is the 57-day contracts, they basically have, right here, this one, the 260, has 1359. Now, why do you think maybe this one has 1359 versus maybe this one over here has, the 255s has 1405, and maybe the 250 has 2857. Well, it's probably because it's closer to the money, right? It's closer to the current price. But then you might be wondering, well, how come this one right here? Well, if we're looking at this approach that it's closer to the money, if we're looking at this approach where now, hey, that one's even closer, the 245 is even closer, but it has less contracts. Well, why is that? Well, maybe it's because it's not a round number. You can see 250 is a nice solid round number. So a lot of people are concentrating their positions around 250. You know, even here, the 240 may be a little bit of a round number and it's close to the price, but it only has 702. So what you'll notice and find is depending on previous stock performance, depending on how things have worked in the stock in the past, you may or may not have more or less contracts at certain points. Like here, you could see this one, as we go down, you can see we're decaying or deteriorating a bit more and more on these contracts. So we've got 379, then 777, 707. And then later on, what's happening is we jump up to 489. Why? Well, we're at the 290 over here. And what about this one? This one at the 300 level, we jump to 878 contracts. And then the one right after it at the 305 has only 61. So if I'm kind of interested in the 300 and, you know, between 290 and 310, which one would I choose? I'd probably choose this one, the 300, because it's a lot easier to get in. It's a lot easier to get out. And that means I can probably get a better bid-ask spread or fill rate. So when you're looking at these prices, it means you can probably get in and out of it a lot easier than you can with maybe something else, because there's just more contracts, more demand, more availability, more people are interested in that, and that's what they're kind of looking for. So anyways, that's really what open interest is all about, because sometimes you don't have trouble getting into the trade, but what if you need to get out? And if you're stuck in something that trades really few shares or really few contracts, that could be a problem. Now here we've got 1,000, 2,000 contracts. I'm going to show you here. Here is the SPY. SPY is the spiders. And when we look at these contracts, just to show you how much open interest is on these, let me just go to maybe 10 strikes here. So you could see we've got 3,000, 17,000, 5,000, 42,000, and here let's go to 25. And you can see there's thousands of contracts. And then you could go with something else, like let's say CMG, Chipotle Mexican Grill, and we'll go to this one. You can see there's only 21 contracts, 8 contracts, 26. So I would be much more concerned about trading a CMG on the open interest than I would with Facebook. Or, you know, let's look at maybe AT&T here. If you look at these contracts, you can see 6,000, 7,000, 6,000. You can see quite a lot of contracts. Here's JCPenney. Okay, this one's got 200, 400, and then 0, but there's not a lot of premium. So would I trade options on JCPenney that's 18 cents? No. How about, let's see, Uber right here. $34 a share. And what you can see is about 600, 200, 2,500 share contracts. That's a good thing, right? Those are pretty good. But other ones like, let me see here if I could find another one. How about a Twitter? Let's see what we've got. We got about 1,000. How about something like GoPro? Also about 1,000. And let me see if I can find one. What you can do is go in and look at scan, and let's say favorite optionable. Let's say we go to FFIV. Let's see what that one looks like. Right here, a lot less contracts. And how about ISRG? Also another one I used to trade a lot more. You can see a lot less contracts as well here. 20, 25 contracts. Even Google, Google here trades very few contracts. So you need to be a little more careful when trading stocks that have a lot less open interest, because the liquidity is just not there. If you're looking at things like an Apple, you've got thousands of contracts. A lot of people are trading it. It should be very easy getting in and out of those trades without a problem. So anyways, I hope you found this video helpful, gave you some things to think about, and it's insightful for you. So stick to stocks and options that are a little bit more, have a higher open interest. They're usually the more popular ones, and that'll help you avoid getting into some trouble. Be sure to go ahead and subscribe here on YouTube. Check out the awesome videos and video trainings as well, and that way you stay up to date. Thanks again, and remember, do what you love, contribute to other people, but most importantly, live life abundantly. I'll see you next time.